You've seen it in the movies, you've heard me talk about it. What is stock market investing? Before we get into today's video, make sure to hit that subscribe button because we release videos every single week helping you achieve financial freedom. Starting from the basics, investing is a method of achieving passive income where you put money up front once and you continue to get paid for it thereafter. Day trading is different from investing because in day trading, it requires you work every single day to pay attention to the short-term action of the price of a stock. That is not investing. Investing is where you buy something and plan to hold it for the long term. One of my favorite quotes from Warren Buffett is, it goes something along the lines of, only buy a stock that you wouldn't mind holding if the stock market shut down for 10 years. Invest in companies for the long run. Companies like Coca-Cola, McDonald's, companies that you know are going to be around for the next 10, 20 years. Big banks, ETFs, REITs, real estate investment trusts, things like that. Usually with market caps in the high billions, okay? I would say invest at least 80% of your portfolio in these safe blue chip stocks, okay? I would leave the extra 20% for your speculation and tech if you want to do that. But that leads to the second tip, which is stay away from spec stocks, stay away from any type of speculation. Things like Bitcoin, things like tech companies, maybe Amazon or Netflix. Don't get me wrong, these are great companies and they do have long-term potential, but as a safe investment, I would consider these very risky. They don't even pay a dividend. A lot of it is based on speculation of what the next guy is willing to pay. When Bitcoin rose from 1 grand all the way to 17, 18, 19 grand, it was the greater fool theory at that point. It's what I'm buying it at this price because I know someone's gonna pay a little more, and it was all speculation. We all know how that ended. Now Bitcoin's around 7 grand or whatever at the time of this video. The third tip is to buy low and sell high. Sounds like common sense, right? You would think, oh, I'm gonna buy the stock super low and I'm just gonna sell it high. Not that simple. Unfortunately, most people buy high and sell low. They buy at all-time highs when everyone's excited about the market. Everyone on the news is saying, oh, stock's the best time to get in. I'm making money every day. They buy, and then stock market crashes, and what happens? Oh no, I'm losing all my money. I gotta sell. Panic. You wanna be the opposite. You wanna be a contrarian investor. Just like Warren Buffett says, be greedy when others are fearful and be fearful when others are greedy. So when people are selling and everyone's panicking, that is the time to buy. And when everyone's buying and saying the market's going up, be scared. I would get cautious there. Start scaling back on your investment. So the fourth tip is to invest in companies that pay dividends. Get those dividends and reinvest them, taking advantage of compound interest. There's two guys, James and Thomas. Thomas bought Coca-Cola stock 50 years ago. He spent 10 grand. 50 years later, he blew every single dividend he got, never reinvested it, and now his Coca-Cola stock is worth $500,000. That's cool, right? But James got the same investment 50 years ago, spent 10 grand on Coca-Cola, but reinvested every single dividend back into the company. Now his Coca-Cola stock is worth $1.7 million, more than 3 times Thomas's amount, and he's getting a $22,000 a year annual dividend payout. Point here is take advantage of compound interest and reinvest always. Fifth tip is to be an owner, not a consumer. If you have an iPhone but you don't own Apple stock, you're a consumer, not an owner. Own the companies. Sixth tip is to not put all your eggs in one basket. When you invest in the stock market, you want to be diversified across all different sectors. No more than 20% in one sector. So tech, like Facebook, etc. That's one sector, no more than 20% of your portfolio. And like earlier in this video, 80% of your stock portfolio should be in safe blue chip stocks. That other 20% you can try to use for your spec or whatever you want to invest in. So open small positions, 500 bucks here, 500 bucks there. Don't go too crazy and go all in on one stock. You don't want to put all your eggs somewhere because if the company loses half its value overnight, you are done. Don't make that common mistake. I've made it before. I don't want you to make it. Seventh tip is to do your own research. 90% of what's on the internet is complete BS. You want to look at the financials of a company, at the charts of what's been going on, the actual numbers on the stock, the PE ratio, the earnings that's been released. Pay attention to the numbers, look at the trends and what's going on. That's going to help you the most, and that's what's worked for me. So, how do I actually buy stocks? Well, there's online brokers such as Robinhood. That's the one I use because there's no commissions every time you buy and sell a stock. And I recommend any broker that you do use, try to avoid the commissions because those will eat up into your profits. You don't want to be spending $5, $7 every time you buy and sell a stock, especially if you're a beginner and taking on such small positions. Now later on, if you're investing $1, $2, $5, $10,000 per position, go ahead and use a broker that pays a commission, but I still use Robinhood. that's it for today's video. I hope you know how to invest in the stock market now. If you have any questions, leave them in the comments down below. I respond to every single comment, and subscribe for more videos. The next video we'll release will be about how to survive an economic crash, how to bulletproof your portfolio. So stay tuned for that. Make sure you hit that notification bell so you know when it comes out. See you guys.